All right, I'm starting recording and I'm gonna admit everybody. Okay. Hi, everybody. There's going to be some more people. We got about 20 people in. We have maybe 120 that signed up, so we'll see if people want to, how many people end up joining on a Wednesday night. But hi, I'm Martin Tobias, and this is my friend Gary Benerofe at Mu Ventures. And we're going to talk today about product fit. What is it? What do we think it is as a VC? What do founders think it is? Some different frameworks. We'll just talk about what we've seen in the market as VCs for about 20, 25 minutes, and then love to get to questions. I know we have a lot of founders, we have a lot of other investors on the phone, and we'd love to get your perspective, answer your questions, really as part of my ongoing effort here to try to tell to founders what VCs are looking for and how we define different terms to make it easier for founders to find VCs that have a common agreement on what they're building and stuff like that. So why don't we start? I am Martin. I'm a VC. I invest B2B software. Gary, maybe you can tell us a little bit of background and then tell us what you think PMF is.
Sure. So Gary Benerofe, Mu Ventures. Background, I've been a founder, I've been an investor, a professional musician. I've had a lot of careers. I think Martin, I was using a product that you ran a company for at coding.com when I was running my e-commerce agency. So it's nice to partner up with you here. Today, I'm basically investing in pre-seed and seed stage companies that remove friction from a transaction. So that's all things commerce enablement, marketplaces, supply chain, ad tech, martech, payments. As far as what I think product market fit is or how I use it in my job as a term, as a framework, I'll be honest, when Martin asked me to join this, my initial response to the thought of product market fit was that it was a term that was pretty poorly understood and therefore not particularly helpful in the sort of day-to-day of working with founders and working with portfolio companies. That being said, I've since gone and dug up all the frameworks I could find out there and done some research to see how it fit with my understanding of it in common parlance. And I'll have to say that I think First Round has a pretty awesome framework to think about product market fit. And if you haven't checked it out, Google it, like PMF First Round, you'll see more information than you bargained for. But I think the big takeaway in how they think about it and define it was really helpful, which is one, it's not a thing that you get and have forever. It's something that exists on a continuum that you can lose and you can move forwards and backwards. So the basis of their framework is there's four levels, right? Nascent, developing, strong, and extreme. And in a way, they map a little bit with venture stages. Nascent, the earliest, is a little bit like pre-seed stuff, maybe a little bit of early seed. Developing is closer to like seed and A and so on and so forth. I won't bore you with all the details right now unless people want to get into it. But the definition that they use, and then I'll stop talking and see what Martin thinks about this, is widespread demand for a product that satisfies a critical need that can be delivered repeatedly and efficiently to each customer. So you got demand, satisfaction, and efficiency. And those are like key areas of product market fit that you would focus on at different points in your journey. So if you're really early on and you're just getting started, you're really focused on satisfaction, right? Do you have something that people love and want and need? And as you move further up and you've gone from nascent to say developing, then it's a little bit more, how can you wrangle demand? Can you find a channel that works outside of, let's say, founder-led sales? Is the next customer getting easier and easier to get? And this is like the evolution until eventually, let's say you're at the next stage, you're more about efficiency. It's like, all right, I've scaled performance marketing. Can I figure out how to scale TV or content or in-person stuff? There's just different needs along the way. So I'll pause there, but that's my initial thoughts.
I really like their framework for it too, and it is a thing that's not well defined. But one of the things I wanted to point out, I like the concept of product market fit much better than what we used to use, which was like net promoter score. You used to see a lot of founders say net promoter score, and net promoter score is really just measuring would your customers refer you to somebody else, and that was used as a proxy of if a lot of your customers would refer you to your product to somebody else, then maybe you've got product market fit. But the problem with I found with Net Promoter Score is that a lot of people were asking Net Promoter Score questions in the first sign up before anybody had ever used the product. And so it wasn't measuring that really well, but it also wasn't really fine grained enough. And one of the questions is, how do you measure if you've gotten product market fit? And I don't know what they said about that, but probably the best framework I've seen for measuring product market fit is the Superhuman framework. And you can Google Superhuman's product market fit blog post. And what they do is they ask a question in a cohort basis to all their customers. They were doing this in the beginning. And their question that they asked was not, would you refer it to your customers, your friends, but they said, could you live without, how upset would you be if you couldn't use this product? And their definition was they wanted 40% of their customers to say they could not live, their life would suck if they couldn't use the product. And that if you were over 40%, then you had product market fit because you had a material amount of your customers that really relied on your product. And if you measure that on a weekly or monthly, like a cohort basis, what you want to do is you want to see that number going up towards 40% over time. Maybe it starts at 10 or 15% because you need to add features and all of this stuff. But the goal would be to get it to 40%. And I think that superhuman question is the best way I've found to measure where you're at in product market fit. Have you looked at that, Gary, or did they talk about in their framework how to measure it and see where you're at on those different four things?
Some things that I've heard in that area are like, and this is maybe related to Superhuman, but there was a comment somewhere in the first round documentation around don't get caught in the friend zone, like where people like
Yeah.
your product but don't need your product. And I think one way to, other than what you just described, to assess that is this other process that they talk about around dollar-driven customer discovery. So it's one thing if you have a couple early customers and they want to be nice people and you ask them if you love my product and they say, I love your product. But you're like,
Mhm.
all right, how much would you pay for it? And at what point, if I priced it at this, is what is the number that is prohibitively expensive for you? What is the number that is a little bit rich, but you'd consider? And then you realize, all right, is there a market there at those levels? Can I actually deliver a gross margin at that type of pricing? It's the beginning to understand if you have something worth chasing. And I think earlier on in this product market fit journey, you have to get the idea right.
Yeah. Yeah.
And that's why it's maybe more sensible to spend more time here early on in the like earliest stage of talking to as many customers as possible, making sure that you have and again, this will be using something from the first round framework, but do you have a product? They have these 4 Ps, right? Persona, problem, promise, product. And if you have a product that meets the promise by solving the problem of your persona, right? And
Okay.
you're going to spend all this time once you pick a path and figuring out how to drive demand and hire people that like you really want to make sure that you have this promise that is do or die for the
So,
people.
so do you have any, I'm going to give you an example from my portfolio of a company that I thought did this process of figuring out whether they had product market fit really well. And maybe you can talk about a company from your portfolio that did it really well. Because normally when we invest early pre-seed, you probably don't have product market fit. You might have just created your product, you have one or two customers. So I invested in this company that I think did a really amazing job figuring out product market fit, and it was called Levels Health. And they're creating a CGM monitor that goes on measures your metabolic health. And what they did is that they were using the superhuman framework. They were bringing on customers in weekly cohorts, and they would ask them that question in weekly cohorts, and they had a cohort analysis of it over time. And they were basically targeting to get that number of I couldn't live without your product to 40%. And they knew from the minute they started what it was, and they were basically doing every product enhancement, every feature, they looked and they shipped every week too. And then they said, did that make my number go up or down? If it went down, they reversed the product and then they kept going. But one of the things they did, they had at the time, like 150,000 person wait list. And if you have a huge wait list like that, a lot of CEOs would be tempted to just open up the wait list, start selling, get all the revenue and blah, blah, blah. But they didn't want to open up. What the CEO decided in that case is that since they hadn't reached the 40% number, they hadn't reached real product market fit where the product was good enough that people would refer it to their friends and they'd start that virtuous flywheel going. They're like, my product's not good enough yet. So they actually limited the onboardings on a weekly basis to 100 people. And they stayed in beta, in fact, private beta for 2 fucking years. And kept building the wait list because while they could have opened it up and gotten revenue, and I'm sure that some of their investors were pushing them, hey, revenue, the CEO was like, I'm not going to push the revenue button until I'm more confident that my product is, able to hit that viral loop and really start selling because everybody loves it, can't live without it, and all that stuff. And I'm measuring my product market fit using the superhuman questionnaire, and I got to get it to 40%. And it took them 2 fucking years to get to 40% on a repeatable basis. And then they opened it up and now they're selling it. But they stayed in private beta, limited access to their product until they had driven that number to 40%. And I thought that was really good that they did that because a lot of founders would take the other side of the bet, which is just try to grow top line revenue before all their infrastructure. And they had to do things like build up the infrastructure to ship the products and different features and so on. I thought that was a really good journey to product market fit, was limiting access to your product and doing iterative development that was always going directionally in the right way and having a goal. And even if it took a little longer than you thought, once you do that, then it opens up opportunity much better. And that really worked well for Levels. Do you have a company that you think did the product market fit search thing particularly well?
I do. I have a couple ideas of what might be worth talking about there. But before I do, I wanted to say there's another for people who want to just research this idea and have more things to chew on when you leave. There's another VC, Mistral. I don't know if I'm pronouncing that, but I found a podcast of theirs. And they talk about these 5 pieces of product market fit. And it's different from first round, and it's a little bit more like a thing you get and less of this sort of continuum. But they talk about heavy research and being insanely focused and getting like knee deep and dirty in the market with your customers and forgetting growth and finding value. So that's like the big thing that you were just talking about, which is it's really hard when you have everybody around you trying to get revenue numbers out of you, the investors, your parents, whoever it is you're trying to impress. Like revenue feels like the thing you're supposed to do. And I think the repeat founders, the thoughtful founders, and oftentimes the more successful ones have that patience early on and realize that you shouldn't go chasing revenue early. And I'm almost saying it out loud so that I have the strength to tell that to my portfolio companies
Yeah,
because I
yeah,
get sucked into it.
yeah,
The other let's call it like rule of thumb or thing to think about that I thought was impactful while I was digging in on this topic is when you are in that research mode and you're really trying to find this, if you're not getting there and you're 12 months in and you're 18 months in, I think, and maybe you have a couple hundred grand of ARR, maybe you have 3, 4, 500K of ARR, but it's not easy and it's not growing fast. I think a big mistake founders make at that point is that they pivot a little bit and they should pivot a lot a bit. And there's like a sunk cost fallacy where you're like, I built this thing up and we did engineering to build this product and people are paying for it. And I think you need to be a little bit more courageous early on if you want to take the big swing. And it's hard to do when you're in it
yeah.
every day.
Yeah.
Um,
I think part of that product market fit search is to be very honest with yourself of are you making progress in the set of features that you designed in the right way, or do you need a major product pivot? We're involved in this company mid-funnel. Mid-funnel's on its third pivot. I don't know if the third pivot's going to work, but I respect that the founders tried one way for 6 months and said, wait a minute, that's not going in the right way. So I'm going to pivot. I, as a VC, would rather that the founder pivot than continuing to drive, push a rope that's bending.
yeah.
I don't know what you think.
Yeah, I'll give you an example in our portfolio. So we're investors in a company called Tave. Tave is like a retail media play of sorts. They have a piece of hardware that'll sit at a bar in their TVs and essentially run ads on their own network, and they'll share the ad revenue with the bar owners. And they also have a product that works anywhere there's a screen, 7-Eleven, Bitcoin ATMs. Anyhow, these guys had a product that came out of Y Combinator, really strong founder, and they were doing okay, doing well, maybe getting up near $1 million of revenue. But they had a big unlock when I think they realized it wasn't moving as fast as it could. They weren't sure where the hiccups were, and they assessed the onboarding time in order to get any one of these facilities up and running. And they realized that they could tweak the tech and make it completely
Self-serve.
self-installable, right? All of a sudden, they could just send the hardware and anybody there could plug the thing in. And it was not a super difficult evolution for them. They had just started it, hardware, we do an install, we go on site. That little change changed the love that people had for the product, the scale with which each rep could onboard new people, the productivity of each salesperson, and they quickly 10x the business. Now, a couple other things happened to get that moving, but that was like a big unlock. And
A
I
lot,
have,
a lot of times I've found that lowering the barriers to adoption of your technology can be a huge product market fit unlock.
yeah,
Because if it's too hard to onboard your technology, people can't adopt it fast.
I think there's a tension here in some of this, which is like we get trained as founders that we should get our MVP out in the market and don't let perfect get in the way of good and keep moving and listening and iterating. I think there's a real tension in that theory with the same idea of like your first customers need to be your most beloved. You need to keep them close. They need to drive a lot of the referrals that start your first loved customers. And so I think there's like I met a company the other day who I will not name, who had a product in a space that I loved, and I was loving everything about the story. And then I heard that the churn was terrible. And I'm like, it's early stage. I don't care that the churn is 15%. It was scary, but it's early. But then when I heard the founder's description of why they had gotten there, which was like, look, we're just like throwing things out there, trying a lot of products, and we forgot that we're two technical co-founders, and we just didn't have any CX, or we didn't have anybody talking to the customer. And a lot of them got really pissed. And I was like,
That's good.
that's a problem. Like it's okay to have MVP and push a lot of stuff out there, but you should like maybe be on like a text message with all of your customers. Be incredibly close to that if you want to take that. So just a thought on the journey that stuck with me.
Yeah, so that's an example. And the next thing I want to get to is, could you give examples of things where companies said they think they have product market fit where they didn't, where people were missing the mark? And that I think is an example of one where you've got technical founders and they have a whole bunch of features they want to write, and they just go and write whatever the fuck they want to write. But if you don't have that closed loop back to customers figuring out which ones are resonating and which ones are the next ones they want to do, and you don't moderate your development to be reactive to what customers are finding useful, then you're probably on a iterative path that's taking you further away from product market fit. Because product market fit is customers that love your fucking product and can't live without it. And those are features that they find useful, not that you want to write. And so when I see that, like you did in that company, where founders are not really looping in the feedback from customers to their dev cycle, I say there's a company that's potentially on a path to actually diverge from product market fit. And let me give you another couple of examples where people, have told me, oh, we have product market fit. And I go, okay, how'd you get your first 5 customers? They're all friends of mine. And I'm like, okay, have you ever sold to somebody you don't know? No. Okay, you do not have product market fit.
Yeah.
Because that's one element of product market fit is customers who you don't know have found you. Another one is customers, they say, hey, look, we've got all this customer, we're growing 30% month over month. Okay, how are you getting your customers? Paid ads. And I'm like, okay, but that doesn't mean you have product market fit if all your customers are coming from paid ads. You actually, I think, have to have a huge amount of referrals or positive net revenue retention, customers increasing the usage that they have. If you have all cold or paid leads or all your own personal network leads, that is not an example of product market fit. Product market fit is when customers are referring things to you, when customers are discovering you without you necessarily knowing or paying to find them. You've got to somehow tick over that channel of where people are searching you out versus you having to search them out. If all of your sales are your own outbound things and you don't have a high percentage of inbound or referrals, you probably do not have product market fit yet.
Really
Can you
agree with
think of
that.
other examples of things where people thought maybe they had product market fit, but it wasn't, in your opinion, real product market fit?
I think there's some examples in my portfolio where a particular channel was working and they were able to, let's say, work a channel partnership, right? We do a lot
Okay.
of stuff that's like channel through agencies, and that channel is only so deep. And so I've had people who thought they figured it out because they had a couple really strong relationships. This is one degree of separation from your five friends were your first five customers. And then they just weren't able to trigger any other sales channels.
Any other channel?
And
Yeah.
then you realize you lost a lot of time thinking that you had a real sales channel here. But again, it was more of this like unscalable people pushing your product for other reasons than it's solving the problem of your persona.
I think that's a good one. You could trick yourself into believing you have product market fit if you have one sales channel that happens to be working. But I think the true product market fit is if you have multiple sales channels that are working, if there are multiple ways that people can discover and buy your product, because that means that there's just different ways for people to discover it. If you have only one way, you're unlikely to have product market fit because there could be other reasons, like you're co-selling with something else and that guy is really good at adding on your product. But if there's no independent demand of your product from that other product, it's hard.
There was a story on the first round site, and I'm going to forget what the name of the company was. It might have been Ironclad, and they were selling like a legal assistant back in 2014 or 2015, like AI assistant. And he was on his website with AI assistant, and he wasn't getting any traction. And then I guess he got an inbound for somebody looking for, I'm going to get it wrong, but contract management software, some existing software type where there's a bunch of competitors and people look for this, and these are the words that they use to search. And he took the inbound. And he's actually, my product does all that. He's like, yes, I'm one of those. And he went and won the deal against 13 incumbents and then went on to build a big company. And the kind of message was sometimes you might have the right product, but like your promise or the product marketing and the messaging is not resonating with your persona. And this is especially true, I think, if you're trying to what feels like create a new market. And creating a new market is really hard, but sometimes important. I think the lesson there is that sometimes you can be creating a new market, but do so on the backs of an existing market to make sure you figure out where the people are that have the
Yeah.
budget, that know the name of the thing that you're trying to sell.
Yeah. Yeah. That's a good one. Okay, unless you have anything else to say about product market fit, maybe we can go to some questions. I see one question that somebody typed in the chat. I'll ask that and we can talk about that. But if anybody has questions, raise your hand and we'll go through questions. Sharish asked, what's your perspective with a startup that doesn't have VC funding? By this definition, it means you have to have revenue first and can't wait a long time to build the perfect product. I would still recommend, first of all, I love companies that bootstrap. And I understand when you're bootstrapping, you might have to do more consulting or custom work or whatever, versus the product. But I would still encourage you to read like the first round thing and to read the superhuman thing and to think about is everything you're doing, moving you along to product market fit. I would still encourage you to think about what product market fit means, where you are at. Because one of the challenges of bootstrapping that way and doing anything you can to pay the bills every month is that you end up getting distracted and doing edge features for certain customers that aren't reusable by bigger customers, which is going to constrain. You end up turning yourself into a services dev shop versus a product company. And if you want to be a product company, you have to be thinking about product market fit and building a set of features that multiple customers can reuse, which is the whole idea of software. And you have to be measuring or checking in with yourself on a regular basis to see if that set of features is appealing to a larger and larger set of customers over time. And if you're bootstrapping, I would encourage you to think about, do your customers love your product, and would 40% of them be super upset if they didn't use your product? And be honest with yourself of, are you making progress towards that kind of goal, even if you're having to do consulting work or custom work to pay the bills along the way? I would still say it's still very valuable to think about the concept of product market fit as you're bootstrapping. What do you think, Gary?
I agree. I think all the concepts are the same. So if, as I was describing the nascent, developing, strong, and extreme versions of product market fit, instead of it being pre-seed and seed, then it might be your own version of gross margin. How long is each sale taking? What is the percentage that you're closing with each sale that you touch? You'll need a set of metrics that help you understand demand, satisfaction, and efficiency. And they just may change based on your capitalization.
Yeah, absolutely. Does anybody else have any other questions about this? Dimitri asked, so is this the same as the retention metric used for customer services? I don't know. What do you think? PMF is different for consumer services versus B2B?
I don't know.
I don't invest in consumer, so
I don't know if I totally understand the question.
I don't know either. If Dimitri, if you wanted to get online and ask the question verbally, maybe we can answer it. Joel had a question. What are some unique ways you've seen super early stage startups like healthcare consumer interact with their initial power users to get really great understanding of what the features are important? That's a good question. I've seen companies do weekly or monthly questions on, can you live without this product? I've also seen a lot of them do advisory panels or customer satisfaction calls. You see sometimes early startups that'll do 50 customer discovery calls before they build their product, but the best ones continue to do customer discovery calls after they ship their product, in my opinion. How about you,
Yeah,
Gary?
I'll just add in that you've probably heard the phrase like early on, do things that don't scale. And one of the things that doesn't scale is every time you get a new customer, I don't know if it's a consumer thing and you're getting hundreds of customers, or if it's B2B SaaS and you're getting tens of them, it's actually interacting with each one.
Yeah.
And that little bit of, hey, I'm the CEO. I'm glad you bought my product. Like, here's my cell phone, or do crazy things that are horribly disruptive to your life, but incredibly important at this critical stage, I think is time well spent.
Absolutely. And I've seen some of the best founders that I've seen in early B2B software companies is like founders doing customer service tickets, like not just having a customer service team that's, oh, they do whatever and I read the report. I've seen CEOs answering like 10, 20% of the customer service tickets themselves, getting on customer calls themselves. And that doesn't scale, but for the first year, if you did that, you're going to understand your customer issues way better and be able to make better decisions. So I do like that. Dimitri, you had a question.
Yeah, I'm just happy to jump in and more elaborate more on what I've been asking. I'm coming from a little bit different perspective. My company, the platform we are launching, it's not really B2B. It is B2C, but it's also more like B2B2C. So that's why when I heard you guys talking about product market fit is we cannot live without this product, it sounds a lot like on the consumer side, how integral the product becomes to people's lives, how often they come back, how much they use it. So this is just what I wanted to see if you guys could relate to this. And also I'm curious if you guys might have something to say about B2B2C. How do you look at those type of ventures versus pure B2B2B? Here's a SaaS, here's a tool, here's how it's used per seat versus a model which is focused on getting consumers into the platform with something free and then some sort of an upsell, which is business focused rather than consumer focused.
I think, first of all, I don't invest in B2B2C companies. I only invest in B2B companies. So I'm not the best investor for this. But part of the reason why I don't is that figuring out this, do you have product market fit, is much harder in a two-tier model like that, B2B to C, because you've got two different customers. You've got the business partner that's your partner, and they have certain reasons why they want to do it. Maybe they're trying to increase the average cart size or increase their customer retention. And then you've got consumers that get some value out of your thing. So you really have to measure both of them. And are you meeting, are you indispensable to either of them? And it may require different feature sets. And I think trying to figure out what is important to both of them it just adds a layer of complexity that makes it hard. And that's one reason why I don't invest, is that I think solving that multi-pronged problem is harder than solving a single problem to a B2B customer, personally.
Yeah, I don't have anything to add to that because similarly, I tend not to invest in those types of companies. So I don't have enough experience to say anything credible, to be honest.
Okay. Thanks, Dimitri. If anybody else has a question, wants to raise their hand, there is another question from Pete up here that says, is PMF about features, outcomes, or price? In other words, does the customer need to love the output of the product, love using the product, or love paying for the product?
No one loves paying for the product.
No one loves paying for the product. I think it summarizes down to, can they live without the product? Like, you're gonna have to pay for something, and if they can't live without it, it's because they're getting more value than they're paying for it, right? You have to deliver. The old adage is, you have to be 10x better than the old way of doing it. If you're 10x better than the old way of doing something, people don't really care what they pay for your thing. But so it's really about, are you delivering material value, and are you delivering it fairly quickly? Let me tell you one customer or portfolio company I have that has great product market fit. And one of the things, it's called Vega Cloud, and it's a company that does AI software that helps you manage your cloud environment and reduce your cloud expense. And their value proposition to the customer is, if you spend more than $500,000 a month on the cloud, you install my software, I guarantee you're going to save 10% in the first month. The average customer saves 25% in their first month. So the value prop to the customer is, install my software in your first month, you'll save 10 to 25% of your bill. And they'll know within 30 days whether they did save that. And so if you are able to, and the customer they price the product as a percentage of net savings. So there's no install cost up front, and they get value within 30 days. If your product is able to deliver tangible customer value in 30 days, you'll have a lot of customers that want to try it, and this will be something that you'll be able to sell very easily. Not every product can deliver value that quickly, but when you do that, that makes it very easy to sell the product. And that's a product that's easy to get, that has product market fit, because the customer need, they're like, I want to save on my cloud bill, and I'm going to know within 30 days whether it works. It's a very quick answer.
I think to that point, you could also really study why people are becoming customers, or more importantly, why they're not, and how you get told that. And so if it's, oh, I love the product, it's just too expensive, that might be a nice way of saying, I don't need this product, because if they really need it, like, they'll figure out a way to pay for it. Or it's just not the right time. Maybe next year is like another way of saying, like, you're not solving my problem. This is a vitamin, not a painkiller, right?
Yeah, yeah. If you're a vitamin, not a painkiller, that's also not a very good product market fit. If your product has a long time to deliver value, for example, I tend to not invest in things that are, for example, compliance related, that are like measuring some metric over the period of a year, and at the end files a report with the federal government or something like that. Because the problem is that it's hard to measure the value of that product for a year. And people will be like, I'm paying for this thing and I don't understand the value for too long. And those tend to be hard things to sell. Arzon had a question. Do you typically see PMF validation post pre-seed funding or prior to it? The way I define pre-seed, and Gary may define it a little different, is you've got an MVP built, you've got some product that 2 or 3 customers have tried out. And really what your job is in pre-seed is to get a higher level of product market fit. You're not going to get perfect product market fit, but maybe you get from 0 to 1 in the framework Gary was talking about, or from 1 to 2. Your goal in pre-seed is to get more PMF, is to prove you can sell to customers you don't know, to prove that you can get referrals. And you need to get a little bit of traction there. In the seed round, you want to get even more product market fit, because in pre-seed, in my range of B2B software, I'm investing when a company has maybe 50 or $100,000 of ARR. And what we're trying to do is get them to $500,000 of ARR. And if you've made it to $500,000 ARR, and you've got 20, 30% of your customers as referrals, you've got some initial data proving that you have a little bit of product market fit. And then the seed companies, the VCs that are going to give you a $5 to $7 million round to get you from $500,000 ARR to $2 million ARR, are going to be trying to get you even more product market fit. And then the Series A, once you've reached $2 million of ARR, it's really not about product market fit anymore. You have to have nailed product market fit by the A, in my opinion, because what they want to do, they want to then blow out distribution channels. They want to see that you've got 3 distribution channels that works. You've got good customer referrals. You've got good net revenue retention, like customers love your product, blah, blah, blah. And they just take the 10 or $15 million or $20 million they're going to give you for the A, and they want to just pour the fucking gas on distribution. They don't want to have a question of do you have product market fit? But if you've made it to $2 million ARR, chances are you've got pretty good product market fit in 1 or 2 sectors, and they just want to pour gas on it to raise the revenue. By the A, if you don't have product market fit, you're not getting an A done.
I agree with all that.
Yeah, yeah. So really pre-seed is when you have to, and that's why I encourage people to managers, CEOs, to think about, what does product market fit mean for my product? How am I going to measure it? And over the period of when you've raised your pre-seed, measuring, are you getting better at it? And if you're not getting better at it and you have to pivot, then pivot. But that's the whole goal of pre-seed, is to find a product that can get to $500,000 of ARR and can be sold to customers, to people that you don't fucking know. Yeah. Does anybody else have any questions or want to put it in the thing, or we can?
There's one more in there,
Oh.
which I'm intrigued by. How do you find PMF as an investor? If that question, I could interpret that question 2 ways. If it's like me as a founder of a venture fund, how do I know if I have a product that's fit for the market? I will tell you, when I started in venture, and I'm 3 years a venture capitalist, despite the brief stint in 1999. When I started, my deal flow is a deal every 7 to 10 days. And then last year we saw 1,800 deals. So we have the draw of founders for our particular sector, and that is one proxy for some product market fit. I would say the other is not just seeing the deals, but getting access and getting in at valuations that are attractive, and ultimately showing that you have markups and the likelihood to return, in my world, at least a 3x fund. It takes 10 years to do so. I'm 3 years into it, so I don't know, but I read the tea leaves every day and think probably more than I should about how to tweak the sourcing, picking, and winning portions of our business.
Yeah. The other way I could read that question is, what's the right product market fit between me as an investor and a CEO as a founder? And that's one reason why I talk a lot on Twitter about the kind of sectors that I like and the other things that I like to do. Because when you're picking as a founder, a venture capitalist, you're creating a 10-year partnership, and you want to be aligned with people that you like and people that you get along with well and stuff like that. As an investor, I spend a lot of time trying to get to know the CEOs, see how they think and things like that. And I want to have like investor founder fit and investor sort of team fit. The other way to talk about this is, what do I think is founder market fit? As an investor, I'm looking for founder market fit, and I want to have a founding team, whether it's 1 or 2 or 3 people. Usually it's 2 or 3 in my mind, that really understands the business problem that they're trying to solve, that has a technical person that can build an innovative product, and then has a salesperson that can sell it to the customers, and then has somebody that can raise money. Those are the four primary things I'm looking for in a pre-seed company. And many times that's at least two people you need to get those four things. But that's what I'm looking for in founder team fit to become an investor in that company. And Mike Wallace had a question. What's your view in the current pricing of pre-seed? What percentage shares and rough valuation? It's all over the map, but basically the way I define pre-seed is you've already gotten either a small angel round or from bootstrapping, you've created a product. Maybe you've raised two or three or $400,000 in an angel round to build your MVP, but somehow you've built your MVP. Sometimes you've bootstrapped it, somehow you've raised money. But in my mind, pre-seed is the first institutional round after you've done an MVP and you're raising $1 to $1.5 million. And I have in this current fund one, I've done 16 investments. My average entry price is $8 million for a pre-seed. And the range is somewhere between three and for pre-seed B2B, but that's defining it the way I define it. Some VCs will say pre-seed is two guys with an idea and not even an MVP, and that might be a different pricing. But generally, I'm seeing pre-seed in the mid to high single digit valuations, selling 10 to 20% of the company. I don't know what you're seeing, Gary.
Yeah, very similar. We define pre-seed quite similarly. I like to see a little bit of revenue, not because I just want to know that they can sell and there's a real problem there, not that it's growing or that the ACVs are so big. This typically means that I'm looking at, yeah, between 7 and 10 posts. But yeah, it's usually this 15 to 20% dilution that's coming. And I think one big determinant is, and I often don't play in these, but exited founder with great pedigree can walk in with a nothing and command 15 posts,
Yep.
20 posts if you got AI in your domain. It just happens not to be where I play. So I'm really usually in this 7 to 10, 6 to 10 post on my pre-seeds.
I'm the same. I tend to not do YC type companies that are great, unbelievable teams raising $3 million on $20 million before they have any kind of revenue or product. That can be successful, but given our fund size, another thing that a lot of founders don't realize is that a lot of your VC strategy is determined by your fund size. And if you're a sub $20 million fund, you're writing a $250,000, $300,000 check, you're not participating in $5 million first seed rounds. But if you're Andreessen Horowitz and you have $1 billion fund, you could write a $5 million check to two smart guys that are second time founders and just take a flyer because it's 0.5% of your fund. So when you see those rounds done by the big firms for people at high valuations, it's typically a second time founder from a very big fund for whom that money is a tiny percent of their fund. Yeah. All right. If nobody else has any other questions, this has been a fun conversation, Gary. And
Yeah,
I
thanks
thank
for
all
having me.
the investors that were on the call, all the founders. Good luck with what you're building. Good luck in your search for product market fit. And I am very excited. I don't know about you, Gary, but I've been doing investing for 25 years. And the kind of companies that I'm seeing now and the quality of the teams with big tech firing people and good people starting companies, it's a really exciting time to be an early stage investor. And the last thing I want to say, the last three companies that I've invested in, we put in $1 million to $2 million first institutional round, but the plans that we were funding were more than 2x the projected burn to cash flow break even. So I'm investing recently in companies that could potentially raise only one round of funding, like Microsoft did. Microsoft raised 1 million total venture capital dollars before they went public. Hopefully we're going back to a time where as a founder you can raise a little bit of money and create a pretty interesting company, and I think that's good for investors that are part of that first round. It's also good for founders if you don't need to raise $100 million before you sell your company.
Yeah, that by the way, first of all, thanks for having me. This is awesome. Love the questions. Love being here. That idea of some people call it seed strapping, you're going to raise like one round of capital and then be done with it, is another thing that actually works for fund sizes like Martin and I have, sub 20 million, and doesn't work for Andreessen.
Yep.
And part of product market fit or part of that journey or investor founder fit, I don't know, is like understanding that dynamic and not knocking
Yep.
on doors for people with billion-dollar funds if you're roadmap is more fit for somebody with a $15 million fund.
Give us a call. Tell us what you're building. Thanks, Gary. Talk to everybody later.
Yeah.